ChatGPT, Gemini, so on and so forth, Grok. I mean, they're just doing incredibly well across the board. And all of the APIs that they serve out and all the agentic AI services that are built on top of them, they're all doing incredibly well. I think that there's just a giant breakthrough in AI's capability, and inferencing has just become a giant workload. Second, people realize that Blackwell is just a home run. NVLink 72 is a home run architecture. We designed it to be a thinking machine, a reasoning AI system, and I think people now, the confluence of the breakthrough in reasoning AI and the availability, now the emergence of Grace Blackwell NVLink 72, perfect timing. I think that's at the core. A big part of it. And the second part of it is that our supply chain is growing, and we're really ramping it up, and they're doing fantastically for us. And so all of these things are all coming together.
And so it is fair to say that some of that additional supply on Blackwell and the demand for Blackwell kind of made up for the opportunity lost in China, at least in the outlook for this current period?
Yeah, I guess so. But, you just can't underestimate the importance of the China market. This is the second largest AI market. This is the home of the world's largest population of AI researchers. And we want all of the world's AI researchers and all of the world's developers to be building on American stacks. And so, irrespective of the near-term revenue success that we have, we can't ignore the fact that the Chinese market is very important.
You explained, again, in some detail, that at least in the Hopper architecture, you have engineered down to the lowest spec possible. It's not possible to do anything different with Hopper for the Chinese market. But in your consideration for a different architecture or a chip for the Chinese market, is that what we're talking about, a new design or new class? And have you made that proposal to the administration, just designing from the ground up a new chip?
We're still thinking through that. They're just the limitations are quite stringent, quite limited, if you will. H20 is as far down as we could take a Hopper. We don't know how to make it even less, and so that's really the limit. So there are main, the limitations are quite stringent. So we have to really think through it. Whatever we make ultimately has to add value to the market, and so it's a really tightrope because the Chinese competitors have evolved and advanced greatly over the last year. Like everybody else, they're doubling, quadrupling their capabilities every year, and the volume is increasing substantially. And remember, these are data center chips; they don't have to be small; they could be quite large. Without American technology, the availability of Chinese technology will fail the market, and so. Whatever we offer has to at least be competitive, and it has to add value to the market.
Darling, artificial intelligence, AI. Since 2023, Jensen Huang, the CEO of NVIDIA, has promoted the concept of sovereign AI, which is based on the premise that each country should be in charge of its own AI that is influenced by its own language, culture, and values. Europe is now beginning to pay attention to this message. The chip giant announced intentions to create an AI-powered industrial cloud for European manufacturers only this week, partnering with Deutsche Telekom to launch sovereign AI in Germany. By 2026, this so-called AI factory, which will be administered by Deutsche Telekom, should be operational. It is intended to assist European manufacturers in using AI into a variety of fields, including digital twins, simulation, robotics, and design and engineering. Actually, this is only the start. With plans to extend its chip footprint into data centers in Spain, Italy, the UK, Finland, and Sweden, NVIDIA is also exploring outside of Germany. Therefore, is NVIDIA's expanding contribution to this growth worth investors' attention, given that sovereign AI is finally gaining traction in Europe? NVIDIA, a California-based company, has quickly become a leader in the computer industry because of its revolutionary developments in AI and GPU technology. Data centers, driverless cars, high-performance computing, and immersive gaming are just a few of the current innovations made possible by NVIDIA's chips, solidifying the company's position as a major player in the digital revolution. NVIDIA has solidified its position as one of the most valuable firms in the world with an astounding market capitalization of $3.5 trillion. However, the chip giant's explosive growth has begun to slow down in 2025. Investor mood has been impacted by a number of geopolitical challenges, such as rising trade tensions and tariff disputes between the United States and China, growing investor hesitancy regarding the rate of AI spending, and the introduction of new competing chips. NVIDIA is up just 7.3% so far this year, which is a long cry from its previous pace but still surpasses the tiny 1.7% gain made by the S&P 500 index over the same period. This is after the company's astounding 794% return over the previous 3 years. Large, fast-growing companies like NVIDIA are rarely inexpensive, and given its dominance in the AI market, this premium is to be expected. The stock is now trading at 35.4 times forward earnings, which is significantly higher than the industry average. On the plus side, though, that valuation is actually more fair than it has ever been. NVIDIA's current multiple indicates that, although still pricey, the stock isn't as overheated as it once was, especially when compared to its 5-year average of 47.33x. When the Chip King revealed its fiscal 2026 first quarter earnings results on May 28th, all eyes were on NVIDIA, and once again, it exceeded forecasts. Revenue blew over the $43.3 billion expectation, soaring 69% year-over-year to $44.1 billion. NVIDIA's data center division once again took center stage, exhibiting rapid expansion as the business continues to fuel the AI revolution. The data center division of NVIDIA produced an impressive 73% yearly increase to $39.1 billion, which accounted for a commanding 88% of the company's total revenue. In the meantime, its gaming division increased 42% to $3.8 billion due to the demand for high-performance 3D chips. The growth party was joined by its robotics and automotive sector, which accelerated 72% year-over-year to $567 million. When the U.S. government decided that NVIDIA's previously approved H20 chip for China would be subject to additional restrictions, the company encountered a regulatory speed bump during the quarter. The effect was expensive. NVIDIA projected that it lost out on $2.5 billion in potential sales and incurred a $4.5 billion loss for excess inventory associated with the chip. The company's adjusted gross margin ended up at 61%, but it would have been significantly higher at 71.3% had the China-related damage not occurred. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Huawei have an AI accelerator or a GPU that is performant as H20 or is performant of other classes of GPU that you make?
Huawei's technology, based on our best understanding at the moment, and we have a lot of ground truth there, is probably comparable to an H200. And so they've been moving quite fast, and they've also offered this new system called Cloud Matrix that scales up to even a larger system than our latest generation Grace Blackwell. And so Huawei, as you know, is a formidable technology company, and they're not sitting still. And they look for ways to compete, and they're quite formidable.
With that in mind, you've kind of explained the landscape now, NVIDIA's ability to operate in China. I mean, you and I this year alone have already discussed the idea that there are 50% of the world's AI researchers in or from China. But are you having a sense of the vacuum created that those big names, I think about Tencent or Alibaba or Baidu, that were buyers of H20, that they've already pivoted and turned to the offering from Huawei because of the policy that is in place?
Yeah, they have no choice but to, one of the challenges of the changing regulations is the ability for markets to trust the NVIDIA and ultimately American platforms. And so it's prudent, I think, for the Chinese customers to make sure that they develop their stack on Huawei. And because it's hard to rely on American technology at this point, and so that's one of the unfortunate parts of changing policies. But anyhow, I have every confidence that if able to compete, American companies will compete. This is to write off American technology companies is not smart. This is the home of some of the brightest computer scientists in the world. American companies are incredibly competitive. We just have to have the confidence to go compete. And if we have the confidence to compete, we will win.
You said during the earnings call that you trust President Trump and that the president has a vision and a plan. Could I ask if you've talked to him about that plan and if it includes coordinating with NVIDIA on policy adjustment that relates to changes in technology export controls?
Well, obviously, I don't know all of his ideas, but let me tell you about two that are incredible. The first one is utterly visionary. The idea of tariffs being a pillar of a bold vision to reindustrialize, to onshore manufacturing, and motivate the world to invest in the United States, and it's just an incredible vision. I think this is going to be a transformative idea for the next century for us. We're all in on the idea. We're setting up plants and encouraging our partners from around the world to invest in the United States, and we have a lot of stuff going on, and so I'm very excited about that. The second major idea is to rescind the AI diffusion rule, recognizing that this isn't about limiting American technology, but this is about accelerating American stacks around the world to make sure that before it's too late, that the world builds on American stacks during this extraordinary time, the AI era. And so these two initiatives are completely visionary, and it's going to be transformative for America.
In terms of profitability, NVIDIA reported adjusted earnings of $0.81 per share, which exceeded forecasts by 8% and increased 33% year over year. That amount would have increased to 0.96 in the absence of the drag from the H20 chip charge. However, the company's Q1 performance seemed to satisfy investors, as seen by the stock's 3.3% increase on May 29th. NVIDIA is estimating $45 billion in revenue for the second quarter of fiscal 2026, give or take 2%. This amount already includes an estimated $8 billion in losses from recent export control limitations that affected its H20 chips. With a 50 basis point margin of error, GAAP and non-GAAP gross margins are predicted to be 71.8% and 72%, respectively, in terms of profitability. NVIDIA is still aiming high, with mid to 70% gross margins by the end of the year, despite the challenges. Overall, NVIDIA's stock continues to hold a resounding strong buy consensus recommendation, demonstrating Wall Street's consistent faith in the company's long-term prospects. 37 of the 44 analysts who have made recommendations are recommending it as a solid strong buy, 3 are recommending a moderate buy, 3 are recommending hold, and 1 is recommending a strong sell. With an average analyst price objective of $174.02, there is a 23% chance of price growth above the current levels. Given the street-high price objective of $220, NVIDIA may see a 55% increase in value from this point on. NVIDIA is putting itself at the forefront of Europe's AI aspirations as sovereign AI grows popularity around the continent. The company is making sure that nations continue to rely significantly on NVIDIA's technology, even as they work toward AI independence, by forming strategic alliances like the one with Deutsche Telekom in Germany and expanding into European data centers. Export limitations are limiting sales in China, so our European expansion creates a new and timely growth path. Furthermore, considering the business's solid foundation and ongoing support from Wall Street, NVIDIA's most recent European expansion adds yet another potent dimension to its growth narrative. Investors should pay heed to NVIDIA's strategic move in a market where regional AI independence is becoming a priority. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
This result to a long list of accomplishments from NVIDIA. The fact that they can exceed expectations for the quarter and guide for sequential revenue growth, while one of their biggest markets, their second biggest market, is really frozen, is very impressive. And that's why the stock's up after hours. This isn't as bad as it could have been, considering the fact they had to stop selling H20s on April 9th into China and had to write off a substantial amount of inventory. So that's a significant accomplishment. other takeaway, though, is the company's been very careful in how it's communicated this message, but let me make it a little bit more clear. We are currently frozen out of China, and if we remain frozen out of China, that's going to have a material negative impact on the results of the company, which is to say they probably will not be able to accomplish the goals that the consensus estimates have for them for next year if they can't get back into China. So they are actively lobbying the administration, the U.S. administration, to find a way to be able to return to the Chinese market. And that seems to still be a negotiation. That's why the company is so effusive in talking about the administration. That's why the company is so clear about their reasoning for why they should be able to sell into China and how negative it would be if they are not able to sell into China.
Gil, stay with us. I want to bring in Bloomberg Intelligence senior analyst Kunjan Sabani to the conversation. You've published your React document. You have your model and your numbers. But you and I both agree the big question was, where did the makeup come from on the demand side? Where did they sell to, noting the $8 billion lost revenue opportunity out of China?
Yeah, if you unpack the numbers and put the H20 impact aside, this would have been a blown-out quarter where they would have beat the result and the outlook by 7% and 10%, which they have not done in the last 5 quarters. What this means is, based on our math, that Blackwell did $3 billion above expectations. And remember, Blackwell expectations were not brought down, both in 1Q, 2Q. That's significantly important. Having said that, China loss is a real revenue loss, but relatively so is it closed for most of its competitors.
I asked Jensen Huang, did Blackwell make up the shortfall? He said, I guess so. What's next? What happens for NVIDIA in that key market of China?
I mean, the one thing we were expecting them is to announce the new chip or any clarity around that. So I think that was the only negative out of today's call, that we didn't get that. So might create some room for uncertainty and, rumors or speculation when it comes to numbers going forward. But the other key important thing we saw today was that gross margin, again, taking the H20 ban out, came in better, which means the Blackwell yields and cost improvements are running better than we anticipated.
Gil Luria, final word to you. What happens next for NVIDIA?
We need to get clarity on what are the restrictions of selling chips into China, and given those restrictions, what is the product that NVIDIA can sell into that market, and how does it stack up against the Huawei product? I think you got Mr. Wang to acknowledge that the Huawei product is now caught up to the H200. So if all NVIDIA can introduce into that market is a product that's not as good as the H200, they probably have lost a significant part of that market. We need to get clarity on that. I would expect us to get that clarity in the next few weeks and months.
The most significant technical advancement of our time is artificial intelligence, AI. AI is predicted to completely transform society in a matter of years. You might soon be able to do your laundry with semi-autonomous robots and then get groceries in a self-driving automobile. Life is going to change drastically, perhaps for the better. NVIDIA, the top provider of AI chips that power everything from data centers to robotics, is at the epicenter of this so-called fourth industrial revolution. Over the last 36 months, NVIDIA's stock has produced an impressive 829% return, converting a $10,000 investment into $92,980, thanks to its pivotal role in the AI value chain. That may sound amazing, but Palantir Technologies has outperformed it. Palantir has returned an incredible 1,744% over the same 36-month period, turning that $10,000 investment into $184,370, nearly doubling NVIDIA's remarkable profits. Despite being in opposite lanes, both businesses are riding the same tidal wave. Palantir provides the software layer that analyzes the data and makes practical decisions possible, while NVIDIA constructs the computing engine. As a key AI holding, which of these leading innovation stocks is the superior investment? Massive size and new challenges were both evident in NVIDIA's Q1 fiscal 2026 performance. Revenue increased 69% year-over-year to $44.1 billion, with data center revenue rising 73% to $39.1 billion. However, the situation in China is gradually getting worse. Due to new export licensing regulations, NVIDIA lost $2.5 billion in H20 sales in the first quarter and anticipates losing $8 billion in the second. With market share in China dropping from 95% to 50% as a result of these restrictions, CEO Jensen Huang bemoaned the fact that the $50 billion China market is essentially closed to us. Palantir, on the other hand, is reaching escape velocity. Compared to prior quarters, Q1 2025 revenue of $884 million increased 39% year-over-year. For the first time in the company's history, U.S. revenue surpassed a $1 billion annual run rate, with U.S. commercial revenue soaring 71% to $255 million and U.S. revenue soaring 55% to $628 million. Additionally, Palantir increased its full-year 2025 outlook to $3.89 to $3.9 billion, which reflects an estimated 36% year-over-year growth. Even with conservative projections, the global AI market is expected to reach $826 billion by 2030. NVIDIA and Palantir Technologies hold different positions along the AI value chain within this enormous opportunity. Leading the infrastructural layer and supplying AI's computational core is NVIDIA. By 2028, CEO Jensen Huang predicts that yearly data center expenditures may surpass $1 trillion. With new alliances to create AI supercomputers in the US, Saudi Arabia, the UAE, and Taiwan, the corporation is changing from a chipmaker to an AI factory builder. NVIDIA is leading the way in agentic AI reasoning with its Blackwell Ultra architecture and DGX SuperPod systems, which is a crucial step in the development of intelligent, self-governing systems. Palantir, on the other hand, works at the application layer and assists businesses in using AI in practical applications. The company is in the middle of a tectonic shift, according to CEO Alex Karp, since the need for huge language models has turned into a stampede. Palantir has a realistic foothold in the fight to integrate AI into daily operations, since it is already making money off of AI through government contracts and commercial deployments, in contrast to many AI companies that concentrate on research or infrastructure. NVIDIA trades at 46 times trailing profits, which is significantly lower than its 5-year average price-to-earnings ratio, PE, of 78, even though it commands enormous sales and dominates the AI infrastructure market. Its forward PE of 30 indicates that the market is taking into consideration export concerns associated with China, as well as a natural slowdown in growth from its massive base. On the other hand, Palantir trades at valuation levels that defy conventional measures. The stock has a forward ratio of more than 2:30 and a trailing PE of more than 600. Investors' perception that Palantir is at a significant turning point is reflected in these high multiples. The market seems to be placing a wager on the company's capacity to maintain hypergrowth while increasing its margins, a lofty standard that offers little opportunity for error. Although Palantir's stock has performed incredibly well, perfection is already priced in at 600 times earnings. Any lapse in execution or growth slowdown could lead to a drastic repricing. Compared to the multi-trillion-dollar AI business, its $3.9 billion revenue run rate is still small despite its rapid expansion. The risk-reward profile provided by NVIDIA is more alluring. The company, which is almost 40% below its recent historical average at 46 times earnings, combines a fair price with a number of potent growth drivers. Robotics, a generally underappreciated market, has the potential to be a major driver over the next 10 years, and the Blackwell product cycle is only getting started. Although Palantir is still a great long-term growth story, its present value necessitates perfect performance in the near term. NVIDIA is clearly the more robust core AI investment in this comparison. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.